Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Tuesday, September 9th. Well, a lot has changed since the last recording of this market monitor, which came about 12 days ago. But changing dynamics don't necessarily mean a major change in prices. But we definitely have some new factors to look at. We've got the USDA supply and demand report coming up at the end of this week. Not typically a very impactful report. It certainly has the ability to be, but that would require the USDA to make some drastic adjustments. Whether they even need to remains to be seen. It definitely seems as though they aimed a little high with initial yield forecasts, but they don't typically make snap changes so quickly. It's more of a gradual process, so don't expect uh, much different data to come out at the end of this week. This was a report that typically ranks in the back half of importance of all the reports that they issue throughout the year. But one of the things we are seeing is that crop conditions continue to slide. We've been sliding for the last month or so. No doubt, a lot of it has to do with persistent dryness in places like Illinois and Indiana. I know with Illinois, they have quite a streak going of crop declines with condition ratings. Same for Indiana. We've gotten to the point now where it really brings into question some, maybe, it's fair to question some of the ratings we saw when they're just simply using satellite and seeing things from the road. But now we've had companies go in deeper within the fields, and they're still putting out massive crop ratings. So it just makes you wonder where some of these lofty ratings are coming from, especially the recent ones like S&P Global that basically had everything still where the USDA was initially at in August. Hard to imagine, though, that this long period of dry weather we've had in the lower Midwest, the East Central grain belt, and to the south, where it's been historically dry now for the month of August, and now here into September. Corn, while slipping 1%, is still rated at its highest for this point of year since 2016. With soybeans slipping again another 1%, though, soybeans have now decreased in condition ratings to where they were this time last year. And going into this past week, basically throughout much of this entire season, soybeans had their highest rating since 2020. So definitely a noticeable decline there. Noticeable decline with corn too. It's just that corn has been so highly rated in other places such as Iowa and Wisconsin. That was another one that's been really holding the ratings up higher, but we are definitely starting to see the impact of the dry weather. Another development that came yesterday is they had elections in Argentina where the ruling party, or the president Milei, his conservative libertarian, I guess, party suffered some big losses, and they lost to some left-leaning opposition. And these are what he had done there really opened up their market, helped grow their export business, cut a lot of taxes and regulations and fees that were major hindrances there, and helped Argentina these last few years really step up their grain exports. And if the left-leaning party starts to gain power there, Milei will be around for a couple of years until his next election. But if he loses control of his government, there's a good chance that it's going to slow things down there, and that's something we'll be watching going forward. So, if they can't be as price competitive, or they're not be able to get out as much of their grain exported around the world, I've already read that their farmers will take this action, and they'll start holding on to grain it really changes the overall dynamic and outlook there. So it's something to watch and something that could definitely create some more demand for American agriculture. On the bear side, China imported a record amount of soybeans in August. What they're doing there is they're building even. Remember, they're paying more. They're paying more to buy this from Brazil than they could be buying it from us, but they continue to do so. One, because of the tariffs, but also to build leverage. They come to these negotiations that are set to take place here or continue here in the next couple of months in a better spot if they're not in a desperate place. So and they also, one factor that doesn't get talked about, they're positioning themselves. They know, I'm pretty sure they know when a final agreement's probably going to get struck, and they can time this up. So obviously, if they're continue to buy, and let's say they're bought through to the end of the year, it makes it real easy to have an agreement where they commit to buying from us next year. And that's kind of where we're at with soybeans. We've got a smaller crop, but now we've got smaller demand. And in fact, demand with soybeans, or at least inspections yesterday, new crop inspections down 9% from a year ago. We've had good sales in spite of the fact that China is buying none, but you can't completely make up for the fact. I mean, other countries have certainly bought more from us. Our prices have been competitive, and China's buying from Brazil has kept their prices elevated. So Brazil is selling less soybeans to other countries, but and some of those countries are turning us. But still, the sheer size of what China buys from us typically is a hole, and it puts us in a little bit of a deficit. Certainly not as big of a deficit as many people suspected. If you would have told people at the beginning of the year that China would still have bought no soybeans from us by September 9th, I think people would have thought the picture would be a lot more bleak. Nonetheless, it does not help. It's also interesting that in spite of heavy Chinese buying, farmers in Brazil have actually sold less of both old and new crop beans versus a year ago and versus historic averages. So I think that points to the fact that other countries aren't buying from Brazil. So that kind of has helped save the United States. But it also tells you that at some point, when China, let's say, cuts a deal with the United States and stops buying from Brazil, Brazil's prices are probably going to plummet because they've been elevated for so long. It's only almost been artificially maintained at a high level because of all of China's demand. If China starts buying some for the United States, Brazil's going to have a lot of beans still to sell, and they're going to have to lower their prices pretty rapidly. So that'll be somewhat of a shock to the system. So it's all this maneuvering and trade deals and negotiating, all these moving pieces that are kind of setting up some positives for later, some negatives for later. But we've also obviously seen both positive and negative dynamics right now. So it's something to watch for. Overall, I guess it just gets back to the fundamentals and supply, production. And I do think that at the end of the week, the USDA will start to come down. Not dramatically. Don't think it'll move the markets too much, but we'll actually start to see some of those projections and yields start to come down. Taking a look at weather, east and lower Midwest to stay dry. We're going to warm up a little bit here. That's taken some of the frost worries off the table, but the lack of rain is certainly not going away. It comes obviously late in the year. It's not going to drive the markets too much, but it certainly can change the picture and the final numbers, say, come January. There's no doubt where this dry weather is leading to some yield loss, and that will show up probably more at the end of the year when final numbers are adjusted. In Russia, limited rain, mostly dry for another 10 days. It's interesting. This is a repeat of last year, I guess, where you constantly see how dry it is in Russia, and yet production seems to consistently get raised. So not too much of a concern there just yet. It has been dry for a while there, just like it has been for us. In Australia, their wheat growing areas to the east are finally getting some rain. That is helping there. Still limited rain, too dry in France. And that will not necessarily impact so much world supply, but much more impact on how much they will need to export. I imagine that should help the U.S. export some more grain to France here soon. Overall, though, wheat picture, even though most of these dry areas abroad, such as where it's been dry in Australia and the dryness in France and certainly other places as well, it hasn't really driven much of a rally with wheat, and that's more of a demand issue. The world still has too much wheat, too big a supply. The supply certainly still exceeds demand, and that makes it really, really hard to have any kind of optimism for the wheat market. Taking a look at overnight prices, very, very flat, not much activity. Going back to the last market monitor 12 days ago, 8 cent improvement for corn with a 17-cent decline with soybeans and a 7-cent decline for wheat. So while we've rallied a little bit here in the past few weeks, in reality, we're kind of just muddling around. Um, don't see much hope for beans to have a rally before harvest. Corn certainly could get help from a big turnaround in the report, but we wouldn't expect it. Patrick has the accounts protected for that event, but it's certainly not anything we are expecting. That's all for today. I'll be here again on Thursday, and we'll have our Grain Gauntlet Q&A released sometime later today. And then again, at the end of the week, we'll have Jason's Feedlot Focus. Hope all is well, and I hope everyone who is either getting underway with harvest or is about to will have good weather and good fortune. Thank you.